You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Henry the FLOWMASTER Schwartz from CBOE. The Option Block is brought to you by CBOE. CBOE's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again for your bi-weekly options extravaganza known around the globe as the Option Block, what the cool kids call the old OB. My name, of course, Mark Longo from the THE OptionsInsider.com, as well as, of course, from this fine network. Did you miss me? I was gone for the Monday show, so we had Rock Lobster stepping into the hosting chair, which is always fun, always terrifying at the same time. I'm curious if he had a good time. We'll have to ask him in a second. Of course, if you're having a good time listening to this show, anything else on the network, throw a like, a star, a comment. All that stuff does help new people discover the content. And then, of course, if you want to discover more fun in your lives, and hey, who doesn't? You know where to go. TheOptionsInsider.com/pro. Oh, it is the first. My goodness. It is time once again to potentially draw a winner for our pro trading crate. I'll have to go look and see if our producers are ready with all the new names assembled. Otherwise, maybe we'll do it beginning of next week or something like that. I'm surprised. These months are flying by here. Listen, we're just sending crates out the door willy-nilly. You folks are conspiring to strip us of all of our goodies. But you know what? That's what they're there for at the end of the day. You want to get your name in the hat? Now too late for January, but you can get your name in the hat for February. Of course, oddities, Pro Q&A, that awesome panel I did with the FlowMaster, and all sorts of other fun. TheOptionsInsider.com/pro is the place to go to learn more. As you go around the horn and see who's joining us today, first let's go out to the man who took on the big hosting chair on Monday. He has spent the rest of the week recovering, I've heard, in just a booze-soaked haze. He has finally emerged from that now to join us on the show again. He is the rock lobster himself, Mr. Andrew GIOVINAZZI. Mr. G, have you recovered from your time in the big hosting chair on Monday, sir?
Yes, thankfully I had the intrepid Uncle Mike TOSAW to help me along. But I think I did okay, but every time I do that hosting job, I appreciate the heavy lifting you do every show.
We didn't even make you wrangle any of the data. I'm always wrangling that during the show as well. All sorts of fun going on, keeping the live stream going. We didn't make you do any of that. We just had you talk.
Yes, I got the junior varsity show.
You got like the freshman version, but hey, it's fun enough. I'm glad you were able to do it. It's always fun to let the mice play when I'm away out there, which is always fun. Hopefully you enjoyed it. Listen, I haven't had a chance. Maybe I haven't had the courage to go back and listen to it myself yet. I'll have to do that later this week and see how it came out. And also joining him for that solo hostless extravaganza was the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the show. Did you enjoy a hostless Monday, sir?
You know, you're obviously the man for the job. You have the hot seat, but you know, my favorite segment that we do on the times that you're not there is the Say Mean Things About Mark block, and those are always fun.
You know, I can dish it so I can take it when I'm not here, especially if I don't listen to it. Then I can take it very easily. So feel free to pile on.
You don't want to listen to this show, trust me.
Feel free to pile on me in my absence. And also joining us again, I believe he's dialing in from CBOE East, but let's find out. He is the FLOWMASTER himself, Mr. Henry Schwartz from CBOE. Mr. FLOWMASTER, I know you weren't on the show on Monday, but did you have any disparaging things to say about me on Monday, sir, that you didn't get a chance to say?
No, I would never say anything bad about you. And you do a spectacular job. I am indeed at CBOE East. I'm in our New York office at downtown Manhattan, and it's an interesting week and a nice day here. So happy to be here.
Have they officially adopted the CBOE East branding yet? They put it on the building now, according to the option block, CBOE East.
I put a little sign outside on the building to see what took down.
Just drawn in crayon, CBOE East. I like it. I think we can all get behind that. Let's all get behind a little bit of the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, listeners, welcome to the trading block. And, I go away for a couple of days, and these guys just break the market. Mostly Powell, everything turning red. In yesterday's session, of course, coming on the heels of maybe the Fed saying, bump the brakes a little bit on all these expectations for a rate cut, maybe as soon as March. Probably not. So a lot of that spooking some of the bulls out of their complacency. Coming back today, seems like they're taking the bit back in their teeth, even if we are coming off the highs now. S&P up about 33 handles, or about 0.7% right now. Looks like they got it up to about as high as threatening 4,900 again, right about 48.95, and now coming back down the other side of that, down to about close to 48.75 or so. Still up, obviously, on the day. We'll see where the session takes us. Have the bulls run out of steam for today, or they just taking a breather before they take the next leg back up? They're like, sell us off in your face, new all-time highs for you. We'll see where we end. And, of course, Apple coming out, Tesla coming out, Microsoft coming out. A lot of those narratives to add into the mix this week on top of all the inflation drama. So a lot going on, a lot to mix into the heady stew that is the market these days. All of that backing into a VIX that's a little bit frothier than the last time I chatted with you folks on this show. A little bit north of 14.10 when we kicked off the show, up about a third of a point from where it was back on the Monday show. VVIX also starting to get a little frothier at about an 87, up about 3.5. And let's just see really quickly, how high did we get in ye old VIX cash during the nigh on apocalyptic sell-off of yesterday? Yeah, it was about a 1460 or so. That seems to be really, really about it. And that mostly came, looks like, earlier this morning. So, yeah, the response, as we've said before, to a lot of these sell-offs has been somewhat muted. Again, that gets back into the challenge we talk about all the time on shows like Volviews. What do you do with these VIX calls? You have such short periods usually to really capitalize on them, and that is challenging. I'm sure the Rock Lobster will have thoughts on that when we get there a little bit. Right now, 1410, VVIX 87, up about 3.5 points. VXX 15 up about 0.4 of a point. By the way, if you have questions about how to take off your VIX calls for profit, we had a whole conversation about that on this week's Pro Q&A. So you should be checking it out over there on the Pro. It's more than just these shows, listeners. A lot of great content going up there. UVXY at a 7 even when we kicked off the show, up about 0.15. That'll make our friend Mr. Jim Carroll happy, a.k.a. the captain of the UVXY Defense Force. SVIX 3860 taking a rare breather, down about 0.8 of a point. And UVIX back north of a 12 handle, 12.25 when we kicked off the show, up about 0.5 of a point. Let's look really quickly, see how high did UVIX go. I'm 1281. And that, again, came this morning as well. So the high actually coming earlier this morning, which is kind of weird. And then now kind of giving up the ghost a little bit, which is kind of interesting. All right, a lot to unpack. Let's go around the horn the opposite of the way we came. Let's start out in CBOE East. Mr. FLOWMASTER, sir, what is catching your eye out there in a very topsy-turvy post-Fed market?
Yeah, it's definitely it's an exciting week. So, I started out doing a quick, and hopefully I'll get it posted and tweeted out, just a very quick January recap, volume versus December. Looks like, what's interesting actually is so overall volume in Jan was up about 5% over Dec. But what I think is great is it was higher. Index volume was up 8%. ETF volume was up 4%, and single stock option volume was up about 6%. So to see kind of everything,
that's rare. We were just talking about that on the panel, right? Single stock volume last year was flat. I think it was like 25 million more contracts, like half a day's worth of volume is all that it gained.
Yeah.
So that's good to see.
So I mean, obviously, between the Fed and some of these earnings, and we're pre-earnings now on, the mega names, right? There's just a lot happening. And I mean, yesterday was also just a wild ride. I mean, Fed days are always somewhat crazy, but one felt a little extra crazy because we didn't actually do too much after 2:00. And then a little bit later, things started to get nuts. And so, just looking at earnings, looking at volatility, remember that VIX 250,000 contract Feb call buyer, that position is still open.
How could I forget it?
Yesterday. Yeah. I was like, oh, maybe this guy is, sitting on some big money. And, the futures got a little bit of a bump, but he was kind of, or he or she were basically back to break even for a bit, but now they're looking at, I think those contracts are trading around 48 cents.
Yeah, they're wearing it again. That trade had a couple of brief shining moments, right? You talked about it a week and change ago. It printed $1 very briefly, and then never kind of looked back. And then, of course, yesterday, everyone's looking at that strike now. Everyone's, what's going on with these Feb 17s? So that's part of the problem. Everyone's watching it. The market makers know he's sitting out there, so they're not going to give him the bid he wants to get out of these things. So, yeah, it's interesting to watch. So far, kind of wearing it. But again, the trade is young. We still have some time until Feb expiration out here, listeners. You guys and gals in the audience wanted to buy them. I think 55% of you or so chose buy them versus sell them. So what are you doing with your Feb 17s for 67 cents right now? I'm curious. Hit us up. Let us know. Let's go around the horn. Let's go to the rockingest of lobsters. Mr. G, again, drinking heavily post-Monday to recover from his brief stint in the hosting chair. I think he's now ready and able to join us again. Mr. Rock Lobster, I should say, sir. What's catching your eye out there in this post-Fed week?
I have to shake the cobwebs off.
Were you able to unmute yourself when you're hosting?
Yeah. You know what I found the key to that was? You just never mute yourself.
There you go. I should make you host more often, then you won't have these issues anymore.
I know. I thought Tucson and I did quite well. He had an excellent strategy block, and I think for the most part we didn't do too bad for a couple of old guys. I think today, so I took 80% of my VIX calls off this week after the vol failed. Normally, yesterday it was like, woohoo, you're looking like, but you looked at the drop in SPX, which was like 1.6% maybe. So that is a little over a 24% realized move. And VIX got to 1435. So when you see, and by the way, it definitely should, VIX should go up. It just, the market did not put the extra juice in. So, I mean, we had, let's see, on that move is what, 75 points yesterday down? No, maybe 80. And the 30-day straddle was $120 on the close. So you get a one-day move like that, and SPX, the VIX, what price is VIX, 30-day options. I just kind of picked that in the middle. There was very little demand to pump that bad boy up. So I would say with that to me is normally a sell-off that is not going to stick around for very long when the liquidity provider is not pumping it up. So right now, today, which is hard for me to believe, that the straddle is even cheaper, and VIX is down, I think, in real dollar terms today, for sure. Vol is down. It's $124 for the 48.95. So the market's saying 5,000, 4,800, we're good. And I think part of the reason is Powell said his piece. We do have 3 big earnings, Meta, Amazon, and Apple, coming out. None of the stocks have been able to hold their level going into earnings. I think Netflix is the lone exception. But, AMD came off, but I mean, they rallied so hard before, but the fact that the earnings are going to come out and they're not taking that straddle up anymore, it feels like this VIX level is not going to hold where it is. So I would just say you've got some compression of the curve, and the market is looking for vol to go back down again, back into the 12s. Because the reality is, you couldn't have asked. I wonder what Henry and Mike think, but you couldn't have asked for a bigger wet blanket from Powell. He basically said we're not raising, but don't expect us to cut too soon. But we'll think about it. But that's not saying March rate cut, So, and considering how far we had run, the fact that we recovered half of the drop from yesterday, I don't know. I think the momentum is still bullish, and all those upside call buyers they could end up being right in a couple of weeks. We could see for 5,000 again. I mean, I'm like, even though. So anyway, that's what I see. I think it was a fairly underwhelming response, and I think the underwhelming response because there just wasn't a lot of put buyers looking at that sell-off yesterday. I think we're going to keep going down, and that's what we got.
Yeah, FedWatch was already kind of iffy on the March rate cut, and now I'm sure I haven't pulled it up. I'm sure we'll do it later today on TWIFO when we get into all those numbers. But I got to imagine March FedWatch not looking great. Let's keep rolling out to the land of the uncleist of Mikes. Mr. Uncle Mike, sir. It seemed like a rough Uncle Mike day yesterday. Uncle Powell not exactly giving you what you wanted to hear. But today seems like the Bulls, at least for now, lead in the dance. Of course, as the Rock Lobster mentioned, we got some big names popping off after the bell. That could change all of that in a hurry. But right now, what's catching your eye out there, sir? In an Uncle Mike type of day.
Yeah, no doubt. So, I mean, you look at it, for the overall greater good, I can't say I object to what the Fed is doing. I don't think we need to raise rates, and I'd be okay with a rate cut at this point, but I don't know. So that's where if I were the Fed, I'd probably have done the same thing in reality. So I can't say that I'm upset with them. But of course, the always market going up constantly all the time side of me. Yesterday it was brutal. But one of the things that's happening today, I mean, we're recovering pretty well with it overall. And stuff like that's just going to happen. The thing that's the stock that's the couple stocks that are, or the one stock that's catching my eye the most would be Microsoft. It's back over the 400 mark. And so we'll see if that can continue. But in reality, where we're at this stage is we're waiting for the large tech to report. And we'll see if that gives us what we need to rally in this market, now that we're not necessarily hawkish or dovish, we're pause-ish, if that's even a word, for where we're looking to go this year. And it's the Apple barometer. Apple is up a little bit on the day, up 0.7%, back above the 185 level. But earnings are going to be a really big deal in the near future. So make sure you're prepared for them in one way or another.
Let's see what the market is prepared for. And speaking of being prepared for things, really quickly, Mr. Rock Lobster, before I get into some of the data from today, I know your compatriot of the meatball has been bugging me to add a 0-day segment to the show here, talking about 0-day minute. Of course, the day I'm going to give him one, he has to swap out of the hot seat, tag out, can't make it. So, Mr. Rock Lobster, if you are so inclined, if you want to do a quick 0-day minute, have at it, sir. The floor is yours.
Well, yeah, I mean, for the listeners, it's going to be a while till they get this, but we've been having fun legging into flies in the 0 DTE realm. You get a little start, so you kind of buy the wing part, and then you sell into the body part for relatively low debits. But like the SPX 0 DTE, the volume is still crazy, and now that we have a Fed minutes out, I think there'll be a little bit more opportunity for daily trends. So I would say at this point, if you're looking at 0 DTE, when you have a decent trend by midday, especially right now, 1 to 2, it's worth taking a look at those options if you want to play in that space. And again, right now, vols are, for today, they're a little higher than normal. So the straddle's trading $15. So it does look like the market, at least the 0 DTE, is expecting us to go to 4,900 today. At least that's the way it's priced, and it would not surprise me if we do, because it's only 17 points away. So if taking a look at the premium and versus what you think the market's going to do, that sets up generally decent trades in there. So that would be my 0 DTE minute of the day for the Feb 01 cycle.
There you go, listeners. Ask and you shall receive. You want a little 0-day in your life, then of course we can give it to you. I'm sure the Flowmaster, if we give him time, will have some fun nuggets to add to his. He loves all things 0-day out there, so we can get him in there as well. But let's keep rolling. Speaking of the Flowmaster, let's crunch some of his data now over there on the Trade Alert platform. See what's cooking out there in these markets from a volume perspective. Then we'll get into some of the earnings fun, which of course a lot of people are waiting for this week. What a crazy week. Fed and all these big names popping off, man. A heady brew this week out there, listeners. And if you looked at VIX volume today, you probably wouldn't really know it. It's only 300,000 contracts on the tape. Now, I say only, but the ADV is only 673, so it's not like the ADV is blowing the doors off out there or anything, listeners. So, but still, we're not quite halfway there in the VIX. SPY, though, as it is wont to do lately, kind of outpacing all things VIX, not obviously from a volume perspective, but also just from a percentage of its ADV perspective. SPY seems to be getting there a lot faster and much easier than the VIX does these days. 6.1 million contracts on the tape in SPY land right now. So SPY seems to be responding more favorably to these little whipsaws we get out there these days than VIX does these days, which is also fascinating in and of itself. 8.33 million is the ADV in SPY land, so certainly seems like it's going to hit that today. The S, right around 2 million contracts right now, 1.95 million. The ADV about 3.25, so S certainly seems on the way as well. Small cap saying, don't forget about me, 885,000 contracts on the tape in IWM right now. By the way, we didn't bring up our friends at the top of the show. IWM up nearly a full % right now. So banger day for small caps. And the Qs, 2.1 million, pretty much exactly where they're always hanging out this time of the show. They can always get to about 2.1, 2.2 million contracts by this time of the show. Then they spend the rest of the day lazily getting to their ADV of about 3.6 million. So all that paper early on, then kind of lazy second half of the day. That's the Qs in a nutshell. Let's see what's going on single name wise. Is it a banger week out here, banger day? It kind of should be, right? Because it is earnings season. And the answer is, yeah, it's respectable. It's decent. It's not, 350, 360 to break into the top 10. but it's also not 150 or 160. It's to the north end of the middle of that range. 279 is what it costs you to break into the top 10 today. So certainly respectable. That gets you to our old friend Alphabet Class A, 141.20, up about $1.05 right now. They, of course, had their earnings this week, and everyone's looking now for these extremely high valuations that have been predicated almost exclusively on AI to start making their way into some of these earnings numbers. The big question, of course, for Google is how does this matriculate into ad revenue, which is really their core business. It's a little easier for Microsoft. They have many other diverse income arrays where AI can maybe play a part. For Google, it really has to materialize on the ad front, and so far that has not really happened. So Alphabet up about $1 right now, or about 0.75%. Good for 279, the number 10 spot. Number 9, off to crypto we go. Back to Marathon. Man, this thing has been on a roller coaster over the last month. Up pretty much 100% and then back down 50%. Just crazy time out here in Mara. Today, only $1, only 5.5%, trading right around 1870. A comparatively quiet day for them. Good for number 9, 286,000. Speaking of sleepy, AT&T, aka Telephone, making it at the number 8 spot. Don't see them too often. Must be earnings season. 305,000 contracts on the tape for Telephone, up about $0.33, trading $18 right now. Number 7, everyone's got maybe quote-unquote contagion fears on the brain again after some regional bank issues cropping up this week. It's not even March. We already have regional bank fears getting early this year. Bank of America, obviously not a regional bank, but feeling some of that financial malaise. 33 1/3, off about 2/3 of a point today. Good for number 7, 452,000 contracts. Now we get to the rub. Good old softy, number 6, 459,000. They have been upsized on AI over the past year. Is it merited? People are arguing yes or arguing no based on these results. Probably a better case to be made for them, though, right now than Google. 403 3/4, up about $6 and change, or about 1.5%. So keeping that upside love alive after a little bit of red on the screen there yesterday. Number 5, it's been a while since we've seen this name this low. This is the fruit company, listeners. You may have heard of them. AAPL, I believe they're a French company. 490,000 contracts on the tape for them. 185 3/4, up about $1.33. Obviously, everyone waiting for them after the bell today. We'll get to that in a little bit. That's why I'm going a little bit quicker on the rest of this stuff, listeners. A lot to get to on the show today. Number 4 are the Amazonians. Everyone's waiting for them as well. Number 4, 516,000 contracts on the tape for them today. 157 and about a half. Up about 2 1/3 right now. Keeping it in the A tech names because why not? Number 3, AMD, 541. They had a little bit of a little bit of a culling earlier this week. Some folks thinking maybe those levels we've seen out there were a little bit too lofty for their own good. They were trading about 180 not too long ago. They got back down to about 167 and change, trading 168 and 2/3 right now. So getting a little bit of that back again today, up about $1. But people saying maybe AMD got there a little bit too fast, too soon, taking some off the top, still looking frothy. Number 2, you know what it is. It's NVDA, listeners. 677, up 11 3/4, or nearly 2%, trading 627 right now. So just madness afoot out here in NVIDIA, listeners. Let's see, how are we looking year to date? The stock's already up 30%. My goodness, 30% in a month, listeners. That's not a bubble. I say that. Don't come at me, Tesla bulls. I'm just having some fun. What you mean, NVIDIA bulls. Tesla giving away the number 1 spot. 1 1/3 out there. 783,000. Actually, 1.34 million. I'll say that sounded pretty light. 1.34 million on the tape for Tesla. 187.5, up about $0.25 today for the number 1 spot. But you know what we're all looking for? We're all looking for earnings data. Luckily, we got new reports in our hot little hands, hot off the presses, right at showtime here. Let's dive into it really quickly. Popping off before the bell, we had Qualcomm. These were yesterday after the bell, actually. They went into the announcement 148.5. Easy for me to say. 148.5. They were pricing in nearly 6%, 5.7%. They ended up delivering about 4.3%. Let's see so they were underperformed. Let's see where they're hanging out right now. Off about 4.6%. So still underperforming that straddle, which again, seems like that's where the narrative has shifted to this cycle. From last cycle, dramatic outperformance, pricing in a whole heck of a lot of juice and hitting it. And this cycle, pricing in less juice and failing to hit it. That seems where we're hanging out right now. We want to get to after the bell, so let's go there. Fruit Company, after the bell today. You may have heard of them. 184.40 is where they were when they were pricing in when we ran this report, I should say. They were pricing in $6.67. In the past, they've moved 6.25. So Apple bucking the trend, pricing in more juice. They're one of the few names that's come under some pressure of late, so you could probably argue a little bit extra juice is merited. But it's not a ton, and we'll see if they can make that. The Amazonians, they were pricing in about $10.09. Now they're going the other way. In the past, they've moved, I should say, about $10.90. So taking a fair amount off the top out there in Amazon in terms of earnings juice. Are you comfortable with less vol this cycle and some of these big tech names, listeners, or you prefer to go the other way? Well, I guess we'll find out after the bell today as well. And let us not forget the artist formerly known as Facebook, now Meta, also today after the bell. They were trading right around $3.90 when we ran this report. By the way, Meta not in our top 10 today. That's kind of interesting. 25 1/3. My goodness. Let me check this again, make sure this is right. This is the definition of a discount from a vol perspective. They are pricing in $25.37, listeners. In the past, they've moved, get this, $44.58. That is quite the haircut they are taking on their straddle. My goodness. Either it's a fire sale in vol out there in Meta, or something else is afoot. I'm going to need to dig into that a little bit more. But there you go, listeners. If you're listening to this after the bell today, then probably too late. But yeah, intriguing stuff out here. That's why you got to join us live. Little nuggets like this. Meta vol could be on fire sale levels. Let's go really quickly. Mickey D's, they're the fifth before the bell, trading right around $2.93 when we ran this report. They're bucking the trend entirely. They were pricing in $8.18. In the past, they've moved $4.85. So not quite 2x, but pretty darn close on the straddle front. So not everybody is pricing in less juice. Just a lot of people, like Palantir, also on the fifth. They were pricing in $1.92. In the past, they've moved $2.36. So Palantir taking a fair amount of juice off the top as well. And so on and so forth. You folks can see all this data for yourselves because we like you completely for free. Head on over to theoptionsinsider.com. Click on the Options News and Articles tab. Do it soon. You want to see this stuff before the announcements as we keep on rolling into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, it is time to get weird. It is time to get wild. Well, at least weirder and wilder than we have already been in the first half of the show. This is where, of course, the FLOWMASTER takes the reins and tell us what's been catching the eye out there this week. Mr. FLOWMASTER, seems like you're starting off in a name that we have become quite familiar with. Everyone's favorite, Synovus Energy Inc., a.k.a. CAVE. Ticker symbol CV. This one's been a hot one. We've talked about it a lot. A lot of our listeners have chimed in, looking at the flow, coming up with their own theories as to why people are buying this stuff. It was the Feb 17s, as I recall. Sounds like you're seeing more flow out there today, sir. What's catching your eye out there in the cave?
Yeah, so we have mentioned this one a few times in the last month, specifically because we were seeing a kind of a repeat opening buying of the Feb 17 strike calls, and those were like in the 30-40 cent range at the time. They got up to about 75,000 contracts of open interest, and the stock has actually kind of trended higher as well. So today it's the March 18 calls, and we saw a buyer of 25,000 of those, which is opening. And I've looked at this one, and for disclosure, I am long the stock because I look at this and, earnings are on February 15th. And to see this kind of growing position, I'm certainly leaning into it. Today, they paid 34 cents for 25,000. It was March 18 calls. And so I don't know if it's the same person or not, but you're up to almost, over 100,000 contracts of long calls that were pretty clear that's what's going on. That's 10 million shares of notional size, and this thing only trades 11 million shares a day. So this is one of those where, this trade is getting very, very large. Maybe we get a rally, it continues to climb into earnings, and I might unload most of the stock before earnings, just because, sometimes that's kind of the way I like to play it. But, it's just, this one is just a persistent call accumulator. So I kind of like it.
Yeah, they've been loving these. Again, there was some speculation this was driven by some approval meeting in a Canadian regulatory body. That came and went with the approval. The stock didn't budge. In fact, it sold off. So it doesn't seem like that was what they were going for. Early on, we speculated that this tied up pretty closely to earnings. That does seem like that's been what's driving it. But you're right, they're going beyond it now into March. So it seems like this trade will persist. Have you folks gotten in on this? It hasn't really worked out that great, but if you're intrigued, maybe the March is the way you want to go. Maybe you can get these for a more attractive level than you could have before as well. So either way, maybe that attracts you. Mr. Flowmaster, Mr. Rock Lobster, sir, what are your thoughts on this ongoing flow in everyone's favorite name, the cave, sir?
I think I've been watching flow in this stock since the summer. I think a couple of times I got I got a little nipped by it. Maybe I think Henry's might have the right idea, just buy the stock and forget about it. Because it pays a good dividend and all that. I think, what is this, Canadian tar sands or some bizarre thing? Not that bizarre, but all I'd say is, I think this stock will go up eventually. It looks like it's some kind of like cheap asset play, but the call buying has always it has been a perplexing. I don't know. I've just never timed it very well, to be quite honest. So doesn't mean it can't go up, but right now, I mean, it's stock's at kind of near the bottom of the range, so I guess this would be a better time than not to scoop some calls. But I like Henry's idea: just buy the stock and forget about it.
Buy the stock, maybe sell the hell out of these calls and live to fight another day.
yeah, and that's kind of where I am, because it's just sometimes these energy companies buying calls, you can be you can start to wither on the vine, waiting for something to happen.
Speaking of withering on the vine, maybe dying on the vine, let's go out to the next name the Flowmaster has spotted for today. This is a newcomer to the network. This is Rocket Lab USA, ticker symbol RKLB. I'm going to go out on a limb and guess they are a lab that makes rockets. I'm just guessing. $4.13, off about $0.75, nearly 15%. So not a great day for the lab that makes rockets, listeners. In terms of years, also not a great year, especially with today's sell-off. They were looking they were almost exactly flat on the year, actually, even slightly up. And then today's sell-off put them back in the red. A year ago, they were a little bit shy of $5, $4.98. They crushed it for the first time in April, down to $3.62. That was their low for the year. They may look like they want to retest that now. Then they rallied it hard. By July, they got up to their high for the year of $8.05. So they more than doubled it. And then it came right back down again. By October, it was trading $4.14 again. And then they tried rallying it again. Looks like in December, they got back up there, ended the year right around $5.80. So it was still a net up year. And then ever since the year started, listeners, it's been just a big ball of crap, off $1.20 or a little over 22% on the year already. And today's sell-off certainly not helping. Another 70 cents off the top. So a rough year, Mr. Flowmaster, for this lab that makes rockets, sir. What caught your eye out there today?
Yeah, this one I have not looked at before. For a second, I thought maybe it was like Rocket Mortgage or something. But their news says that they announced a convert issue late last night or something. So that's, dilutive and, shows that they kind of had a need for cash. And so is basically when there's an issue like that, whether it's, a shelf filing or something that is a little bit of a surprise, it kind of shakes up, volatility and everything else. And in this name, Vol kind of jumped into the 70s from like the 50s, and it looks like it's just brought out a lot of different premium sellers is kind of what the bulk of what I see, especially out in the January. The 4, it looks to me like the 4-5 Strangle was sold out there for $1.65, and now the stock's around 410 or so, but then there actually also was a little bit of a bullish trade. There was also a seller, 3,300 of the Jan 10 calls as well. So I think that in this case, it looks like somebody's kind of just assuming that the stock's going to kind of meander here, wants to take advantage of that vol. It's a little bit of a weird one. Anytime you see kind of some sort of corporate action or capital move, I think kind of only the smartest people that know how to interpret a balance sheet and make sense of it get into it. But I try to understand what they're up to. Also I looked back in history. It doesn't look like anybody had anticipated this happening.
I don't hate that Strangle at all. $1.60 for less than a year now. I mean, 40%. There are worse returns. Yeah, listeners, looks like the Jan 25 4-5 Strangle going up for about $1.60, $1.65. Again, looks like about 2,500 times here. Maybe more went up afterward. But yeah, interesting. Mr. Rock Lobster, sir, are you liking that 40% Strangle? Or, I mean, you love Strangles. You must be all over this.
Well, I love good ones.
So you're slamming this one. This is no bueno to you?
Well, I'm not too familiar with Rocket Lab.
That's why you just blast away at the premium. You always sell premium the names you don't know. That's the fun, right? Just sell it all.
I guess that's, of course, why we have the FLOWMASTER here to take a look at it. A Strangle in a $4 stock is, this is kind of what, like, okay, Feb, and then I'm trying to see possible Jan Strangle. I'm just trying to make heads or tails of all the paper here. So, like, let's see. You've got that upside call spread. I mean, I don't think if that's actually a call spread or maybe it's a roll. It was hard to tell. What did he was? Yeah, possibly. Again, it's weird. Somebody selling the Strangle in a $4 stock. I don't know. The paper is kind of perplexing, to be quite honest. Converted. Oh, so they have so maybe somebody bought the convertible and sold the Strangle against it. That's a possibility.
That makes some sense. Yeah.
Because they have the extra juice. Interesting. It's certainly a heck of a lot of. I'll tell you what. The open interest on the 10 strike, definitely. It seems like somebody wants to build a position there. I don't know if they want to. They're writing the calls, but it's just a little head scratcher for me. I wish I had more intelligence on this one, but it's somebody, I guess, writing the 10 calls. Either way, if they're writing those, if you're going to pick a call to write, the 10s aren't bad, because if it gets taken away, you're not going to be too unhappy. So
the 10s too, yeah, those traded for 20 cents as well. We've been mentioned those, so yeah, funky.
Yeah,
funky
so
business.
I could see how they would, maybe it's a covered Strangle against stock or against the convertible, depending where the strike is. Not too bad, but they're also not looking for anything to happen in a year in a $4 stock, which, historically is rough game unless it's kind of a covered trade.
That is rough game. And I'm with you. I think they have to have something else against it, not just a naked Strangle. They probably have this convertible, which they can obviously turn into shares, or they have some shares, or maybe they're going to buy something to the upside. Obviously, having this naked Strangle, something could happen, particularly to the upside. I'm sure that's where they're probably concerned. Let's get to a name you follow more closely, Mr. Rock Lobster. A name your compatriot was talking about today. This is Microsoft. Looks like he found some swinging for the fences out there in good old Microsoft options today, sir. What caught his eye out there, sir?
This was impressive. I believe somebody was YOLOing some April 480 calls for 68.70 cents in Microsoft. So what are those? $80 out of the money. The earnings are already out, and they can't get enough. The upside calls. Let's see here. Yeah, that's almost 3 times the straddle away from the money. So I guess if you're going to YOLO some calls, what the heck? Might as well go for the big daddy. But it looks like there's been mostly call buying in that strike for the day, but no end of call buying still in Microsoft. It falls down to 19, which I have to say is probably not. It's not a terrible price considering the stock is up $100 this year, some crazy amount. So yeah, I just thought that if he just brought that, it looked like pure YOLO craziness.
That is pure easy for me to say. Pure YOLO craziness, listeners. 11,000 of the April 480s going up for prices between 68 and 70 cents. So yes, the 480s, Microsoft right now, listeners, after a nice rally at 403 3/4. 480 by April? You like that, listeners? I'm curious. Hit us up. Let us know. Speaking of let us know, let's get right now to a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, let's get to it. The mail block. Your questions, your comments, also your insights on our various questions of the week. We added a fun one while we were talking here today, just kind of driven by our conversation on the show here today. A little bit of a fun flash poll, which is quite simply, really, what is leading the dance in the market right now? We were talking about at the top of the show. We had the Fed popping off earlier this week. We have a whole mess of earnings going off right now. People are already looking ahead to the election. That's starting to drive a little bit of vol. Or maybe there's something else you think that's driving the dance out there in the market right now. Let us know your votes. So we've already got some folks piling in early on in the flash poll. We'll get to their results in a little bit out here right now. But first, let's go to our actual question of the week, which is VIX. Been below 15 for a while, since November, really, and threatened it earlier this week, but didn't quite get back above a 15 handle this week. So this protracted period below 15, if this persists, how will that impact your options trading this year? Gave you a bunch of different choices. So fewer credit or income trades, maybe doing a little bit less premium harvesting because vol is lower, or flipping it around. Maybe you're going to go out, you're going to buy some more premium, buy some more debit or long premium type trades, or maybe you're just no impact at all. You don't care about vol. You're immune to VIX. I want to hear from those people in particular. Who's immune to VIX? And then other. So people with some other ideas out there, and we're getting some fun others. Let's go to the Uncleist of Mike's first. Mr. Uncle Mike, sir. If you have an answer, how this relatively lower vol level we're hanging out at right now, certainly at least compared to like a year ago, how that's impacting your trading, have at it. And then B, which way do you think our audience is going? And then C, in our fun flash poll right now, what do you think our audience is choosing for what's leading the dance in the market right now? The Fed, earnings, election, vol, or other? So a three-parter for you, sir.
Well, I'm going to go in reverse order. I think that the audience is selecting that earnings are leading the dance in the market so far. In terms of, and I don't even remember the order now, but in terms of how the lower vol environment is affecting my trading, I would say that theoretically I'd like to do more diagonals and calendar type trades, but in reality I'm more of a vertical kind of guy. And then I think the audience is staying vertical now. I'm changing my vote from the previous time of where I think the audience is.
Interesting. All right. And so they're buying more premium. Interesting. Mr. FLOWMASTER, same question for you, sir. How is this lower vol overall? I mean, historically, it's not crazy low, but comparatively to recent vol levels, it is. How is this impacting your trading? B, if at all. B, how do you think our audience is saying it's impacting their trading? And then C, in our fun flash poll going live right now, what do you think our audience is saying is driving the market most right now? The Fed, earnings, election, vol, or other, sir?
So the timing's really good. There was an event last night that I got to go to where our macro strategist, Mandy Zhu, was actually talking about vol level. And, everybody, as you're saying, feels like, the VIX has just been, kind of weirdly low. but she actually was able to put, she had a great chart that I want to try to replicate, basically showing the volatility, the implied vols across a bunch of different assets. So energy, commodities, foreign exchange, and they were all actually low except for interest rates. So and in fact, one of the hedge fund traders that was there, I was talking to him about SPX and this and that, and he said, I've actually been trading more rates vol lately because the equity volatility has just been really boring for the last year or two, which I thought was really interesting. So, but Mandy's view is that, really when you have, the volatilities across a whole bunch of different assets, kind of all lower and just hanging out there, that is really the macro story. And so it's not necessarily that unusual. But it is something to certainly be aware of. And, days like yesterday, where we see a move that's several times the straddle price, kind of shows you which side you want to be on. Optionality, convexity is, I'm not going to say it's cheap, but it is, it's attractively priced for doing certain kinds of trades, right? So, I think that you can't ignore that. And so I'll basically be kind of, there are times where, you and I remember, when in doubt, hands out, you're just a premium seller, period. I think people need to be a little more careful now. So I don't know if that answered the question, but that does address, volatility is low. And, I kind of think that picking your spots to own it is an important part of how to behave this year.
Interesting. You get the final word, at least on these polls, Mr. Rock Lobster. Are folks buying more vol? Are they selling less vol? Are they immune to VIX, doing something else? And also, what's driving the market dance right now? Is it the Fed? Is it earnings? Is it election vol or something else?
I think, at least for right now, it's the Fed. Although they just opined. As far as I think they're doing, I think they're doing more debit long premium now. And to be honest, when the vol is low and stocks are trending, I think long premium is just a much better trade, just because stock goes up $100. Would you rather sell a put for $2 or buy a call for $4 and watch it go to $50? So I think it's definitely a premium buying market.
Let's see if our audience agrees. Listen, let's go out first to our actual question of the week. And right now, we got some immunity folks out there. They've been immunized to VIX. No impact or immune to VIX. We put that in there just for fun, and you folks are loving it. 35% of you saying you don't give an F about VIX. That's interesting. I want to know what you're trading. What are you up to out there that you don't give an F about VIX? Followed by number 2, 30% going the FLOWMASTER route of buying more premium in your back pocket. I think TOSAW was leaning that way as well. Number 3, 20% of you saying you're doing less premium harvesting right now. That certainly makes some sense. And then 15% for other. Let's see really quickly what some of these others are. We got White Truck chiming in saying, I make my money from persistent contango, not a uniquely low VIX phenomenon. When VIX goes up, futures backwardate. And when VIX goes sideways or lower, futures contango, and I go to the bank. Yeah, that certainly is the case. A lot of you out there playing a lot of these ETPs for erosion. All you really care about is the slope of the VIX futures curve, in which case the relative level doesn't really matter. So that is true. That could certainly go into the no impact / immune to VIX. So there we go. A good response. Get them in there. You got about another day or so to make your voice heard. Speaking of making your voice heard, the clock's ticking on this one. This is just a fun little flash poll we just did right now during the show. What's leading the dance in the market right now? Maybe some recency bias here. 57.1% of you saying the Fed. Earnings coming in a distant second for Apple, Tesla, all that fun. Only 28.6%. 14.3% going election vol. 0% of you for other. That's going to expire at the end of the day, so you'll have time if you're listening to the podcast to get in there as we get going around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, let's do it. Let's go around the block. Uncle Mike, the first dance is yours, sir. The Fed in the rearview mirror. A lot of earnings on the docket. What are you keeping an eye on for the rest of this week until the Monday show?
I mean, it's about the earnings right now. So just watching that, seeing where we're going with it. The Fed pretty much making a stance that we're not going to, it doesn't look like we're going to raise, but we're not going to cut. So we might be pausing for quite a while now. And so we'll rely on the earnings to make some news, which isn't a bad thing.
Yeah, I'd be okay with putting the Fed in the rearview mirror for a little bit, just to focus on something else. We've been talking Fed for so long. The F key is worn out on my keyboard. But alas, I digress. Mr. Rocklops, the same question for you. What are you keeping an eye on until the Monday episode?
We do have 3 earnings from some small companies coming out. I believe
Never heard of them. Nobody cares.
Give us a little bit of a look into next week. And after that, if they're just okay, I think we just resume our slow march to 5,000. I mean, unless something drastically changes, there's potential peace in the Middle East or less war. That's, less uncertainty is more bullish. So I'm going to go with that.
And last but not least, Mr. Flowmaster, sir, what are you keeping an eye on until your next Thursday appearance?
So earnings for these big guys, right? Microsoft, Apple, that's kind of fun. And, there have been a little bit of, as was mentioned, the financials there's some rumbling, especially on these, NYCB bank got creamed after earnings a couple days ago. So, and you look at the regional bank index or the ETF, the KRE, and some of these other banks. I'm trying to keep a close eye on those and try to figure out if this is an opportunity to buy the dip or if, we could be in for, some more weakness in these names. So I think keeping an eye on the sectors and the subsectors is important for the next month or two.
All right, listeners, that music means that's going to bring to a close this episode of the Option Block. If you're hanging out in the live or you're listening after the fact, you're saying you just want a little more in your live, stay tuned. We'll be back in a little bit with This Week in Futures Options. Of course, if you're listening after the fact, just hit next on your device of choice. You should be subscribed to the whole network by now. Otherwise, what the heck are you doing? I'll be joined by Dan the Man Grams to break down all the action going on in the world of futures options. Spoiler alert, it's a lot, so it should be fun. Stay tuned for that in a little bit. Before we get there, let's go back around the horn. Mr. Flowmaster, sir, if folks are intrigued, they want to kick the tires and light the fires on all the cool tools and offerings going on in the world of CBOE, where should they go? What should they do?
CBOE.com/RMA, which is Risk and Market Analytics, and also the datashop.cbo.com is where we sell a lot of data sets. Some of them are very inexpensive. If you want all the trades in Microsoft, for today heading into earnings, you can actually get them there just a few dollars. So come on over and take a look.
Just a few bucks. Get in there. CBOE Data Shop, CBOE.com/RMA, the place to go to kick the tires and light the fires. And Mr. Rock Lobster, sir, if folks want to kick the tires and light the fires, what you got cooking? Where should they go? What should they do?
Yep, 888-TRADE-01. That's where you want to go. 10% off.
There you go. Man, a few words. I like it. And last but not least, Mr. Uncle Mike, sir, where should folks go if they want the Uncle Mike mobile pulling up on their front lawn post-haste?
You can follow me on Twitter at Mike2Saw, TOSAW, or you can check out my website, stcharleswealth.com, and set up an appointment with me. I love talking to our listeners.
All right, everybody. That's going to do it for a little bit of the old OB. Back again in a little bit with Twifo. And then, of course, back again tomorrow, noon Central, 1 p.m. Eastern, for a whole bunch of fun out there on Volatility Views. Who will join us? Got to tune in every week to find out. After that, exclusively for all you pro cats and kittens out there in the secret club for a little bit of options oddities. Then back again on Monday, another episode of the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by CBOE. CBOE's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cbo.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.